Hey guys, it's Nick, and in this video we're going over student loan forgiveness. What has been going on over the past couple years, and what could possibly be coming up in the next couple years. We'll be jumping into some websites, going over the actual details, showing you what could possibly qualify for forgiveness, what has changed with the new save plan that has been implemented over the last year or two, because we have to understand what's going on with student loans so we can get out of student loans, because student loans suck. And at the end, we're going to go over some actionable steps so you can actually do something to help yourself if you're in student loan debt. Let's go to the computer. And we're on the laptop, so we're going to be going over a couple different screens, websites to go over what has been going on with student loans and what could be going on in the upcoming years for student loans. So first, just to give an overall view of where we are with student loans. This is from the Federal Reserve website. You could go to, it's FRED, but you could see back in 2008 it was only around $600 billion and has grown past COVID up to $1.7 trillion. Interestingly enough, it did come down slightly in the year 2023, but since then has just continued back upwards. I did look into that dip we might come to at a certain point, but let's start off here. So this is studentaid.gov. So this is straight from their website going over who might qualify for student loan forgiveness. So this is important to know, and you could just, if it's more specific for you, just go to this website and you can check it out. So certain situations, you can have your federal student loans forgiven, canceled, or discharged. That means you don't have to pay them back. So let's look at some ways to qualify. So one, if you're a teacher, let's drop this down. You may be eligible for teacher loan forgiveness of up to $17,500. Now I want to put into perspective because that seemed a bit low. So I looked up what's the average student loan. Yeah, it's just under $40,000 for the average student loan. So when I see this number, I feel like that doesn't help most people. Might help a little bit, but let's continue. So you'll have to teach full-time for 5 complete and consecutive academic years in low-income elementary, secondary. So that's a specific thing right there. Has to be 5 consecutive years and has to be qualified for low-income schooling. All right, so that probably kicks off a lot of people to actually who qualify for this. You also might be eligible if you work in childcare, early childhood, public, or not-for-profit. So a lot of these, which you'll see, you would have to make, so for example, forgives remaining balance on direct loans after you've made equivalent to 120 qualifying monthly payments. Working full-time, by the way, for a qualifying employer. So there's a lot of specific language in here, so you have to make sure you're qualifying. But 120 years, no, 120 years, probably feels like that for most people. 120 months, that's 10 years. Okay, so, and that's for most of these. If we continue on, for government employee, if you work for federal, state, local, or tribal government, qualifying 120 qualifying payments, right? So that's still 10 years. The government is like, oh yeah, we'll help you, but for most people, you still have 10 years that you have to qualify for. So, I mean, if you want to continue on that path for that long, by all means, military, if you're a military service member, and if you are, thank you for that. Benefits include interest rate caps. I completely agree with this, by the way. The interest rate should only be so much on student loans because, it could just get to ridiculous levels, and I don't think it's really fair for all of it. So that's some with government employee. Then you have if you're a not-for-profit. Again, just make sure you are actually qualifying, but again, 120 months. Let's go to like a nurse or doctor. Again, 120 months. If it's, you're more specific in certain situations, you could try to look into it. Like disability doesn't apply for most people, but for you, might work. You may qualify for total or permanent disability discharge, which does make sense. I mean, if you're disabled and you can't work to pay off the loans, like I understand. If you repay your loans under income-driven repayment plan, this is what has been changed, by the way, in the next site. I'll show you the save plan. But again, you may be eligible for income-driven repayment plan, and all that means is it depends on how much you make. So it's not like a fixed payment of pay $1,000 no matter what you make. If you make a lower amount, then your monthly payments are a lower amount. So it kind of helps you, but the problem there is it's just going to take longer to pay off. Forgiveness if you've been in repayment for 20 or 25 years. So, that's what I'm saying, guys. For most people, the minimum is 10. Otherwise, you're looking at 20, 25 years. So, for me, it just doesn't make sense to hope the government helps you, because they really haven't been. But we can move into that next, actually, right after this last couple sections here. So if your school is closed or if the school misled you, again, super specific, most people didn't, but if that applies to you, you could go into those. Different types of loan discharge, most people probably don't fall into it. And that's essentially it. So what has changed is this SAVE plan here. It stands for Saving on a Valuable Education Plan. Offers lower monthly payments. So it's a kind of income adjustment. Income-driven repayment plan. So like before, the other slot or tab, we saw it was like 20 years. So what has changed since then over the last administration? So it bases your monthly payment on your income and family size. So if you make less, you spend less. If you make more, you spend more. Lower payments for almost all borrowers compared to other IDR. Yeah. Let's see. This I actually somewhat agree with. Has an interest benefit. So if you make your fully monthly payment, but it's not enough to cover the accrued monthly interest, the government covers the rest of the interest accrued for that month. So basically, if let's say you started at, I don't know, $10,000, and you've been paying for like a year, and you look back at your balance and you owe $12,000, so you actually owe more than when you started. This plan is trying to help with that, so interest doesn't keep accruing. So I guess that could help, but that at the end of the day, it's not helping you pay off the loan. It's just less interest. And again, gives borrowers who originally borrowed $12,000 or less. Again, most people are at $40,000. So this $12,000 is like, okay, great. Who are you helping? A person who went to college for like a year and they have 1 year of tuition, I guess. After as few as, I love how they added that, just as few as 10 years. Give me a break. Anyway, if you guys don't hate me yet, we'll continue. More elements of SAVE plan will go into effect in summer 24. So yeah, they have been into effect like the last year or so. Let's see. I know there were a couple. Yeah, so it decreases the monthly payments by increasing the income exemption from 150% to 225% of the poverty line. What does that mean? Well, I looked up the poverty line here. Once that loads. So the poverty line for one person is $15,000. That is pretty low. For like a family, you're looking at more 25 or 30,000. So let me go down a bit further because I believe there's a chart that they have who's eligible. Yeah, you can go through this, and this is from studentaid.gov, by the way. Direct subsidized, unsubsidized, direct plus loans. Here, this will help you out. I'm sorry if there's a loud fan in the background with my laptop. Hopefully that's not too distracting. But this is kind of how it works. So essentially, if you're family size of 1 and you make under 30,000, your payment is 0. Family size of 2 and make under 40,000, 0. 50,000 of 3, 0. So if you're making low money, you don't have any payments. And how they're portraying this is like they're helping you. In my mind, I don't know how this qualifies as helping people. Now, in the short term, currently, yes. If you don't have a payment, that helps you. The problem is the balance is still there. And at this point, yeah, I'm not sure if the interest will continue to accrue because you're not paying anything off. But the big problem is your balance is still there. You still own the student loan. So in that perspective, they're not helping you over the long term at all, in my mind. Yeah, what they're trying to do is essentially trying to cut out some interest payments, which kind of helps, I guess. And then, yeah, what's this? Early forgiveness, another bond. Oh, let's see what this is. Undergraduate loan payments go down. Yeah, this is just talking about your just payments are looking to decrease. As soon as 10 years, that's still long. And that's what's going on. So yeah, that's what's happening there. And what was here? I was looking up of the last administration with a few days left. Yeah, they were talking about the last people that were able to benefit from like the loan forgiveness. Look, specifically, Department of Education approved student loan forgiveness for 4,500 borrowers, totaling $600 million in forgiveness. Let me go back to a chart for you. 600 million compared to 1.7 trillion. That is such a minimal amount of people that's helped. And those people that are actually benefiting are the people that are like, who've basically been scammed or something, or are on disability, or like they medical issues or something, like they actually they're living with something like a condition or something that they literally can't pay off. Those people they're helping. For average working people, you're not benefiting at all. And going into what actually caused this little drop, because that was interesting. Like you could see since '08, constant like rising, right? I'm like, what kind of happened? Well, if you remember back in 2020, student loan payments weren't required. There was like a freeze or a pause on payments. It was going back into effect in 2023. So let's go over this real quick. I looked, why did student loans go down in 2023? Because if student loan balances are going down, like that's helping people. So the first thing that came up here, student loans appeared to go down in 23. What the heck was that? Maybe garbage outside. Sorry. Down in 2023, primarily due to, this is what they're claiming, Biden administration's implementation of the SAVE plan, what we just went through, which significantly lowers monthly payments for many borrowers. Explains, I could be wrong, explain something to me. If your payments are lowered, how come your balances are lowering? Like your balances aren't getting lower, the monthly payments are. So yeah, month per month they might be helping you, but your total balance isn't changing too much. So going back to the chart, if they're lowering the payments, we wouldn't see that dip in my mind. And even if that was true, then how come it's going back up? If this was like a continuous forgiveness and it was actually helping people's balances, you would see it would be completely falling off. But it's not. It dipped a little bit and now it's rebounding. So it's still a problem. And actually, I looked up. No, I don't want Recording. Average student loan debt declines. 6 months after student loan payments restarted, average student loan balance declined by 1,000. So that's the thing. They were saying like, hey, student loans are about to, like, you got to start paying for them again soon. I think that's what caused the balances to dip a little, because people are like, well, I don't want to, pay that huge balance. I'm going to pay down a little bit for the people that actually had money. And now, they did. Student loan payments are back on. Now they're just getting hit. Yeah, here. When did Save Plan start? So this was kind of what, summer of 23. This started to go down in the first half of 23. So the Save Plan wasn't even implemented when the balances started going down. So I'm sorry, but it doesn't seem like the Save Plan is actually benefiting people's balances. Hate me as much as you want, but it just doesn't make sense. Yeah, look. So the student loan repayment was resumed in October of 23. Interest resumed in September. So there were talks in the early 2023, like, hey, you're going to have to start repaying your balances soon. People with money are like, well, I don't want to, so they start paying a little early. Personally, I think that's what happened. So that's kind of what's happening right now. Yes, currently the Save Plan could possibly help you. Actually, sorry, going back to that, possible forgiveness in as soon as 10 years. So when you scroll down, it kind of breaks down how it works. So if you remember, they were forgiving up to $12,000 in 10 years. But what if you owe more than that? Well, again, look, if you owe between 12 and 13, it's going to take 11 years. $1,000 more in balance, 12 years. It's greater than 21,000. Again, getting back to 20 years. Most people, again, are $40,000. How is this helping? It's still waiting and hoping that the government is going to help you in 20 years. Look back at the last, 4 years? 8 years? Has anything happened? No. Do you think anything's going to happen in the next 4 years? No. So what, you're waiting 12 years and nothing has happened? Like, sorry, but it seems like you can get out of this debt far quicker than 20 years if you start taking control of it on your own. So, that's just what's going on. What's going on with the Save Plan. Hopefully it does help you in the short term. But yeah, those are just some websites if you want to check them out on your own. If you're still watching this and you don't hate me, I'm amazed. So we'll stop screen sharing and we'll continue on to the actionable steps next. So if you don't hate me by now, let's actually talk about what could be done, because if we're realizing that the government's not going to be helping anyone anytime soon, then we have to take control of it. So the first simple yet difficult thing at the same time is we have to understand the details of your student loans. So many people don't even want to look at their student loans, so you have to understand how much you have, the interest rate you have, and the payments that you have. Don't be hoping that anything's going to change for you because some magic person's going to do something and help you. Once you know that, we have to see if you're able to either consolidate or even if you're able to get your interest rate down. I know interest rates are kind of elevated at this point. If you're able to improve your credit score, that might be able to help you get a better rate, but that could kind of be like the first steps. I think it's also good if you actually stick to a budget. It sounds super boring, but what you do is you incorporate just paying off your debt into the budget. If you want to pay an extra $100 or something into it, just you understand where all your money is going. I did a video on that a couple of videos ago. You could check that out if you're interested. I have a whole spreadsheet. You can check it out. But the next biggest thing that we have to do is, yeah, it's great to cut back on expenses and save money and all, but we really need to start making more. We need that growth mindset of gaining experience to then move up in your career. Or if you have a business, you could even get into a side hustle to make some extra money to help pay down those student loans. And I know the idea of you paying down your own student loans is going to be super unpopular because everyone wants the government to pay off their debt, but we've seen that they haven't been doing that. So a lot of people might be at that poverty level, or making that poverty level was like $15,000, which is super low, or $30,000. The idea is to grow from that. It does take time, so if you're in your like early 20s, unfortunately that's the time when you're starting to gather experience. When you gather experience, that's how you can move up. Not only within your own company, but look at other opportunities out there to see the type of salary that you can move up into. With more salary, then you could actually start tackling the things you want to do financially. So now that we have established that student loans indeed suck, but hopefully this helps you understand what's been going on, and if you actually want to tackle it on your own to get out of it, probably much quicker than what they're promising, I think it could be done. So hopefully this helps. If you have any questions, comments, concerns, you could leave them down below. Love to hear about them, and maybe in the next video we could go over any of those comments. But again, thanks so much for watching, and I'll see you in the next one.